This is the first live stream I'm going to be doing on this channel, and I really hope to see some of you, see you all quite often. We're going to try and do some, I'm going to try my best to teach you guys basically the correct way of trading, and we're going to look at different kinds of indicators, different kind of strategies, but also the stuff that you don't get taught on educational platforms. There's a lot of important stuff that sometimes goes that people don't learn. So we're going to be doing this. We're going to be doing a live stream once or twice a week. So hit that subscribe button if you guys want to get notified when I'm doing a new another stream, and that in that way you guys won't miss out on anything that we might be discussing. Okay, today we're going to talk about Bollinger Bands, and Bollinger Bands is a very underrated indicator. In my opinion, it's very useful, but a lot of people don't really understand how to use it, and we're going to be looking at that. Also, guys, the guys from Pocket Option has been nice enough to give us a promo code, so stick around for that, and we'll do that a bit later. And yeah, let's dig into Bollinger Bands. So before we go to the chart, I just want to explain quick. Bollinger Bands is a volatility indicator. It consists of a middle line, which is a simple moving average. Then we have two bands running on both sides of those of that middle line. We've got the upper band and the lower band. And the way volatility is measured is these bands are shows you the degree of variation in price, or the volatility of price. So where was I? Bollinger upper middle. One thing to keep in mind is that price always kind of tends to go back to the moving average. So when the bands open up and we get these bubbles in the Bollinger Bands, it means we're in a period of high volatility. And when the bands contract and they stay close to each other, then it means we're in periods of low volatility. So another interesting thing, when you set up the Bollinger Bands on a platform, you will notice that that you are asked for a period and for a deviation. Those deviations, a lot of people don't understand what the value means, what the deviation means when you enter that value. So if you enter a standard deviation of 1, that will mean that when the indicator is on your charts, all the price movement between the bands will, oh no, wait, about 68% of the price movement will be contained within the bands. And if you set that to standard deviation to 2, you're going to get about 95% of your price movement contained within the bands. Okay, so that's an important thing to know. And yeah, you can kind of think of the Bollinger Bands as you can think of the middle line as a rubber band, where when price moves back and it gets outside of the bands, it tends to snap back to the middle line. Okay, so you can think of it kind of like that. So yeah, that's basically it. So we've got the Bollinger Bands, and we're gonna head over to the charts and have a look and see how we can actually use this. All right. Okay, guys, I've got a volume chart here. We can ignore the bottom indicators for now. I just got the Bollinger Bands on, and we're first going to have a look at what it looks like. And I'm going to show you guys two very popular ways that the Bollinger Bands are used to determine entries in a minute. So my Bollinger Bands are set to 14. The reason it's 40, the default will be 20, but the reason I trade 14 is because I like to trade 10-second candles with 1 minute expiries. If you do, you can use it on any time frame though. Like I said, the default is 20. It doesn't make too much of a difference. I just find that the 14 is a bit faster, which suits my trading style. But you can absolutely leave it on 20. You can leave everything on default, and you will still be able to use the strategies we explain. And my deviation is set to 2. Okay, so we can see here that we've got the upper band, the middle band, and the lower band. And if we look at, let me just switch this off. If we look at the way price has behaved just this past half an hour or so, we can see that every time the Bollinger, or most of the time when price gets outside of the Bollinger, it tends to go back to the middle line. So we got that example there. We've got it happens quite a lot. But the thing is that quite often also you guys will see that it doesn't happen, right? So it's not a rule that if price gets outside of one of the bands, upper or lower, it doesn't mean necessarily that price will return. We do get these, we do get the times when price just goes into a run. So we cannot just say that we're going to take reversal trades, for example, if price gets outside of the bands. We're going to have to find a way to filter it as well. So yes, what's the time? I just want to keep an eye. We do have some data coming out in 23 minutes, but it's low impact data, so it shouldn't move us too much. I just don't want to get stuck in a trade when the data hits. We can see how it goes. Okay, so there's two popular ways to use the Bollinger Bands. The first will be the Bollinger Squeeze. So a Bollinger Squeeze will happen. Let's see if we can find a good example. There was one earlier, a very, very nice example. So a Bollinger Band, or a Bollinger Squeeze happens when we go into a period where, here it is. Here's a very good example. So normally the Bollinger Bands would tend to bubble. They open and contract, and that's normal flow. That's what we can usually see. But you do get times when the bands contract and they stay very tight, right? And price just moves within that range. When this happens, and we go into a squeeze, and it's very important to understand there's a difference between a squeeze and just a contraction. Okay, so when the Bollinger Bands close and open up again, that's not considered a Bollinger Squeeze, right? So it needs to close up and stay for a few candles. It needs to stay very tight for a couple of candles. That's an important distinction to make. So this would be an example of a Bollinger Squeeze. So what tends to happen is that when price picks a direction out of the squeeze, it tends to run on the line. It will either be upper or lower line, right? So we don't know which way the price is going to break ever. It's really impossible to predict before the time. But when price does start running and the Bollinger Bands start opening up, we can often it will happen that price will continue in that direction for a while, as we see here, right? So we had the bands close and it squeezed for quite a bit. And then when it finally opened up to the upper side and the Bollinger Band started opening up, price ran for quite a bit and we could have entered a buy trade there. If it opened to the bottom side, we could have just opened a sell trade and expect the same. Let's see if we can find another example. You'll get a few examples during the day, or a few instances of a Bollinger Squeeze during the day, but don't expect them too often. Where are we? That's before the UK Open. Not a lot of examples. So it's a reliable strategy, but you're not going to get a lot of entries with this. Like, you're not going to get an entry every 5 minutes. Every 10 minutes, especially if you're trading 1 minute candles. But the principle stays the same. It doesn't matter what time frame you're on. We can see, let's see if we can find a decent squeeze on the 1 minute. We shouldn't look too long for one. Um, so you're going to get times where, or you're going to get entries, doesn't matter what your time frame is. Just always remember, the higher your time frame goes, the slower your entries will become, or the fewer your entries will become. And not a lot of examples though. Like I said, it's not something you're going to get quite often. We can see kind of a squeeze there. We were in, not a very good example of this, but it gives you the idea. Okay, so it's something to keep an eye on, and again, takes a little bit of practice. So you can keep an eye on it while you're trading. You don't necessarily have to jump on it. I'm going to show you guys in a second. I'm also going to show you guys some ways to filter it. Okay, so the second way that we can use the Bollinger Bands, the second popular strategy, is called the Bollinger Bounce. Okay, so what happens is that when your bands are contracting and they're not opening up, we tend to see rejections of the upper and lower bands like this. Okay, so if your bands are not bubbling and they're staying in like kind of in a range, you can actually play them off the upper and lower bands. It's a popular strategy, but it does also require some kind of filter just to confirm that you are making the right decision. Bollinger Bands cannot really be used on their own by themselves. Okay, so it shows you volatility, and I really wouldn't recommend using them just by themselves, but it is a very, very nice indicator if we can supplement our trading strategies. Add it on your chart and keep an eye on areas where the Bollinger might give you an entry, and it confirms an entry you're getting from your whatever trading strategy it is you're using. I'm going to add some moving averages here. So these are the moving averages I like to trade with. It's a 50, a 100, and a 200 moving average. And if we add them, we can look at areas where price gets outside of the Bollinger Bands, but gets stopped by one of the moving averages. So the moving averages are used as dynamic support and resistance. So when price tends to bounce off the moving averages, but not as a rule. Again, nothing is a law in trading. But I can see that when the bands opened up and my price got outside of the bands, got rejected off this line, I could have entered a buy here. Okay, so the minute I add Bollinger Bands to my existing strategies, they help me confirm entries that I can take. We had a bounce here where price wasn't really, the Bollinger Bands wasn't really making a bubble, and it was close to getting outside, but also got rejected. Again, got rejected by the moving average. Price didn't make it, price turned around, and that's a way to filter it out. And also another, just another word of, no, not a word of caution, a way to filter out low probability trades is when your Bollinger Bands are running below the moving averages, I would be careful of, or I would not consider taking buy trades when they get outside of the lower Bollinger Band, and the same goes if it's running above. I won't consider taking sell trades just because the price is outside of the Bollinger Bands. But we can do the reverse. If it does happen sometimes that, as you see here, where price is moving below the moving averages, got outside of the upper Bollinger Band there, which coincided with the 200 moving average. So there's a sell trade for me. The minute it got rejected and I confirmed my rejection, I could have taken a sell. So I could have taken a sell basically anywhere here, and it would have been a good trade. So that's one of the ways I like to, or I use to the Bollinger Bands. And we will also see that when you get divergence, for example, and your second trough or peak, in this case it's a trough because this would be bullish divergence. We can see the stochastic making a higher low here while price was making a lower low. We can now, and when this coincides with the Bollinger Bands on the second trough, like here, it started going out of the lower band. Confirms for me that it's a good, high probability that my divergence is actually going to work. It's going to be profitable, and that would have been a buy trade for me. Okay, so if there are any questions, feel free to ask. Where are we? I suppose we can do a promo code. There we go. Nico90 for a 90% deposit bonus with pocket option. If you guys want to hit that, make use of that, we can. You can definitely do so. That's actually a decent bonus. Okay, so I was explaining now, and I missed an entry. Here's an example of an entry I would take. We had price come up from the lower band to the upper band. It got out just outside of the Bollinger Bands, but it got rejected on the moving averages here. That's a pity. We missed a sell there. And again, we had some bearish divergence here. Again, the price was moving outside of the Bollinger Bands. And if I took my bearish divergence, if I actually took the trade on this, would have been a good trade as well. So if anybody has any questions, please feel free to ask, or even if you don't have questions, just say hi, and so that I know you're here at least. Unfortunately, I cannot see who's watching now because my other software is overlaid, so I don't know if there's, how many people there are. Okay, anyway, so let's see if we can find a few trades. While we're looking for trades, let me explain to you guys quickly. The RSI also helps with identifying trades or entries using the Bollinger Bands. The RSI, remember, is a momentum indicator, and the Bollinger Bands gives us is a volatility indicator. So if we combine those, what I like to do is, we in this example here as well, when price gets outside of the Bollinger Bands, I look at the RSI and see that we had downwards momentum here, and when we hit the middle line, the RSI got rejected. So the RSI continued downwards, which tells me that the downwards momentum is going to continue, likely to continue. And that will also be a reason for me to enter a trade if price is outside of the Bollinger Bands. As we see, here's another example where it didn't, but so we were moving, price was in a downwards momentum. We had some momentum there, came back up, went through the Bollinger Band, but you'll notice that it went through my moving averages, and it also did not reject on the RSI middle line, so that would not be a sell entry at all. And by the time it got here, we didn't know how to or when it was going to stop, so there wouldn't have been a trade here at all for us. We might get a sell trade here. Let me just have a look and see if we do get rejected, although this is touch and go. This could be touch and go. I'm not comfortable with this. We're not outside of the Bollinger Bands. This could just be a retest of the middle band or the middle line and continue upwards. We didn't quite hit the moving averages. We didn't quite hit the upper band. So this is a trade that I'm going to avoid. Remember always, guys, if you want to do whatever strategy you're using, make sure you have well-defined parameters for your entries. So that you know, if this happens, I can take my trade, or that it keeps you out of a trade if it doesn't happen. Right? So if you stick to your strategy, you won't start stressing out when you lose trades. You won't get emotional because you know this, whatever strategy it is that you use, you've tested it, and I really hope all of you have tested your strategies. but you've tested it and you know, you trust it and you know it works. So make sure you've got very, very clearly defined rules for entering trades. It will really help you with the stress and the emotional battle that we all have as traders. We we tend to get emotional, especially if we start losing a few trades. I was trading this morning, for example, and I lost 2 trades in a row, one after the other, but I was fine with it. I took a trade, won it, took 2 trades, and they lost. And I know this happens. Nobody runs 100% win rate. Nobody. I lost 2 trades in a row, but won another, I think it was 4 after that. And I did not get emotional when I lost those trades. My money management is fine. I'm not trading too big so that I run into trouble if I lose a couple of trades. It all helps. Okay, so looks like turning out that price does want to go down a little bit, but this middle line is keeping it up though. We kind of have a rejection on the RSI, but it's clear. No divergence yet. Price is moving on the middle line. And remember, price always wants to go back to the middle line of the Bollinger Bands. So when price is on the middle line like this, I'm not going to risk any trades. I do like to use the Bollinger Bands as a filter where I play the upper or lower bands. I'm very cautious when price is hovering around the middle band because as we can see here, broke through, came back. This is not an area where I'm going to consider taking any trades right now. So no divergence, and now I just kind of need to wait. Huge thing. Trading is a big waiting game. We are now for 22 minutes in. We did get 2 entries. No, I'm on 1 minute here. I'm on 1 minute. I didn't even notice. Let's shoot back to 10 seconds. We might get a few trades there. So even on 1 minute, in the past 20 minutes or 30 minutes, there was 2 entries on the using the Bollinger Bands, which is not bad. It's a decent amount of trades. But yeah, same rules apply for 10 seconds. Same rules apply if you want to trade 5 seconds. I'm sorry, 5 minutes. If you want to do 5-minute trades, obviously your expiry will be a bit longer then. But the rules basically apply on any time frame. You can use Bollinger Bands on any time frame. We can use basically you can use any indicator on any time frame. Just gotta what's the word I'm looking for? Just gotta be prepared that the higher your time frame goes, the fewer entries you're gonna get, right? Or the slower your entries will be. But it works on all time frames. Okay, so we're gonna have to kind of have to wait to see what price does here. We've got my Bollinger Bands, the middle line, and my 3 moving averages coming together here, and price is staying in this area. So we are 6 minutes away from the data release. I suspect, and this is just a guess, that we're going to see price move in a direction anytime, any minute. We're going to see it pick a direction. Until that happens, I'm not going to really look for trades, because taking a trade right now is, I might as well just flip a coin, and I don't like flipping coins. This could go either way. Let's just have a look and see if we get some entries. I really want price to clear this area. It needs to either go up properly or go down properly before I consider taking a trade. This was not divergence. Definitely wasn't divergence. We didn't get a new high here. Let's see what's going to happen. Unfortunately, we do kind of have to wait for some movement here. Important to stay inside your trading strategy at all times. Just because I'm not getting entries doesn't mean I'm going to start looking for trades that fall outside the parameters of my strategies. So I'm definitely going to just sit tight, wait a minute or two. 4 minutes to go for the data. Although I don't think the data will actually move today. We've got durable goods today from the US. Shouldn't move that much. Although there is some important data coming from Canada. And I can't remember what it is. But it shouldn't affect the euro dollar that much. Core retail sales for Canada and core durable goods and durable goods for the US. Now, durable goods for the US is not a big issue. It shouldn't move us too much, but we never know. We never know. This kind of makes me feel like a buy, although it's a bit late now. The way price got rejected off the middle Bollinger, and my RSI also got rejected off the middle line. If I was quick enough, I could have taken a trade here. But I was checking news. It's going to hit 2.5 minutes. Let's see. It looks like we've got some divergence setting up here. Bearish divergence, mind you. Although we did have some bullish divergence here on the middle line as well. Let's see what happens. Hasn't formed yet. And there's the reason we wait. It's a very bad habit of some traders to jump into a trade because they think it's going to give them they think their strategy is going to give them an entry in a candle or two, and they're afraid they're going to miss the trade if they get in late. So they get in early. And if I actually took a sell here because I thought bearish divergence was forming, I would be having a bad time at the moment. I would have been sitting here watching a trade lose, where the best thing was just to wait for my strategy, see if it gets confirmed, and then take my trade. Okay, I think we're gonna, if we get some more downwards movement here, but not lower than this level, we're definitely gonna have some bullish divergence. Okay, so we're on the RSI as well, on the middle, we're on the lower band of the Bollinger Bands, and the RSI is hitting, and my stock is making a lower low. So this is hidden bullish divergence. At the moment, it hasn't formed yet, but as it is, it's hidden bullish divergence. If my RSI gets rejected, my divergence forms, and we don't make a new low past this area here, this should be a good buy. This should be a good buy trade. Again, just gonna wait for the there's the data release. No, the data release is almost here. Okay, so I'm definitely not trading this. We're gonna see what happens, but I'm not gonna take an entry because there's the data. Okay, so this moved us a bit. It's not a massive movement. It might look bad, but remember this is a 10-second chart. So this is not a big move at all. As expected, didn't move the market that much. We can switch to a 1 minute and see what it looks like. Price is getting well out of the Bollinger Bands. I've got a big DI spike on my ADX with a very, well, the ADX itself is very low, telling me there's a big price change, but not a lot of strength behind the push. Price is way out of the Bollinger Bands, and I don't quite like trading news like this, especially a big candle like this. I know these guys that do love it, and I just really don't. Because quite often I see this happen. You see a big red candle, it starts pushing back, and it turns around again. But that's personal preference. Like I said, I know some guys that actually do trade the news, and they actually don't do too bad. And if you feel like you want to, I mean, this was a fairly valid trade. If we look at the Bollinger Bands, where the price was way out of it, way out of the Bollinger Bands, and it pushed back. Usually when it gets out this much, it will tend to push back into the band area. But on a data release, it's, for me, it's too unpredictable. I'm not a big fan of trading data this way. Now we're pushing to the other side. I wonder if this is going to be the same as this morning's data. We had some data this morning where it just spiked up, spiked down, spiked up, and then basically just continued on with what it was doing. We got this closing out of the middle band again. Just want to put in a line here. I just want to see what happens when price gets here. Back to 10 seconds. Okay, so this is fairly difficult to read at the moment. I think we might actually, if this pushes up, we might be able to risk a sell trade here. Let's just have a look at what it does. There you are, on the line. Let's see what happens. Okay, so the reason I'm taking this is we have this high here, this recent high from almost an hour ago. And price is way outside of the Bollinger Bands. So basically using this using it the same as my moving averages, which is used as dynamic support and resistance. And like I said, I love taking trades when price gets out of the Bollinger Bands and it actually happens on a support or resistance area, like my moving averages. And this is also a resistance area. So there's a fairly decent chance that I can, or there's a decent probability that the trade will actually win. There we go. Awesome. Okay, so we can trade during news. I do trade during news times. I just don't like hitting that first candle when the data gets released. Just not a big fan of that. But if you just sit and wait, the trades will come to you. The entries will come. It's just really important. Like I said earlier, it's just really important to have a clearly defined strategy. So you don't take random trades. You take entries that's within the parameters of your strategy, so you don't have to doubt. And then also don't panic when you don't have to panic then when you lose a trade, because you know it's part of the game. It happens, and there will be more trades. There'll be more trades, and most of them will be profitable. If you know your strategy and you've tested your strategy, you don't need to stress about losing a few dollars on a losing trade. Let's see if we can maybe find something else. This kind of makes me think that there's divergence on the 10 seconds though. Yup. We have bearish divergence on the 10 seconds. I might be a bit late for this though. Got my ADX coming up really strong still. So that's giving me caution, and the fact that we just broke through a support line, we just made a new high for the hour. It's giving me a little bit of caution to taking a trade at this moment, or a sell trade at least. What I would love to see is some bearish, hidden bullish divergence. I would love to see some hidden bullish. That I'll take any time of the day right now. So let's see what happens. It looks like we're going to be pushing like the bulls are here for a bit. Come to party on the Friday afternoon. Friday afternoon, Friday evening, or morning, depending on where you are, I suppose. ADX is still rising. And this is just telling me that the strength behind this push is increasing, is constantly increasing. There's no sign of it slowing down yet. So this is something we're going to have to wait out. There's as long as this thing keeps climbing, it's telling me that price is going to keep going up. And since I can't predict the markets, I don't know when it's going to turn. But we should see a correction at some point. Correction being a move like this, where price is running upwards and then just at least retraces a little bit before it continues the push. But this shows no sign of stopping. Nobody's saying I don't even know. Like I said, I'm not even sure if there are people watching. But it's the first stream, guys. We'll grow this. We'll do very well, I think, showing people the correct way of trading, how it really is, the patience required, stuff like that. And maybe if you are watching this video maybe a bit later, it's evening or tomorrow, remember we've got promo code NICU90 for a 90% deposit bonus. The guys from Pocket Option were nice enough to give. How are you? Glad to see you here. Any questions on Bollinger Bands? Now, if you have any questions, though, seriously, feel free to ask. We are nearing the end of the stream, but if there's a question or two, I will happily answer if I can. Okay, so like I said, the ADX shows no sign of stopping, so I'm not going to look for trades right now. All I know is that I might expect a correction soon. And once that happens, I really hope for some hidden bullish divergence, so I can take a continuation trade. That would be nice, but only if it happens. But this ADX is coming up really hard. We might have a correction here now. Maybe. But when the ADX is running like this, and when I see a move like this, I will be very, very hesitant to take sell trades right now. This is a very, very strong push. So I know that most likely continuation trades is gonna be the thing to do here, because it's likely that, how do we say this? Once an asset trends, if an asset is in a well-established trend, it's more likely to continue than it is to reverse. It's easier to go with it than try to find the high or find the low of a trending asset. We have some divergence setting up here. My RSI does look like it's rejecting. I am outside of the Bollinger Bands. If this stochastic closes, there we go. Okay, so I'm going to take a buy here and see what happens. Lovely. There we go. Patience gets rewarded. Stick to your strategy. It's simple as that. Okay, so if there's any questions, feel free to ask. If there's no questions, I think this is where we're going to stop today's video, today's stream. It's Friday afternoon. I'm going to not keep you guys from the weekend vibe. By the way, guys, all this stuff we discussed here, you actually can use on OTC charts as well. Just exercise a little bit more caution. You know, don't, how can I put it? Just be cautious, but you can use this on OTC. You can use this on any time frame. We took a trade on the 1 minute chart, off the 1 minute chart now, and we took a trade off the 10-second chart. And both were good. We can use this on any time frame, you know. But always remember, be patient and stay within the parameters of your strategy. The hardest work you're going to do as a trader is finding a decent strategy. Once you do, you need to test it and make sure that it's profitable over time. To give you guys a quick idea, whenever I work on a new strategy, a lot of people give me strategies, ask me what do I think of this, and will I test it, you know, stuff like that. And once in a while, somebody actually gives me something very interesting. I then go and backtest that strategy, and I test it live. When I say live, I mean on a demo account, not on my real account, because I don't know the strategy, I'm not familiar with it. But I will test it, trying to take trades in normal market conditions, and I'll also backtest it. And I do not trade a strategy, I will not use a strategy on my live account if I haven't tested at least 1,000 entries. And that's no joke. It's important to test your strategy to know if it's profitable over time. So test it and then use it and stay within that strategy then. Some days we're going to get a lot of entries. Some days we're going to get one in an hour maybe. Usually I get about, if I'm trading 10 seconds, I get about 6-7 entries an hour. Some days I get one some days I get one in an hour. And if I don't have the discipline to stay within my strategy, that's when I start losing money. So if you can't sit and watch the charts, go do something else for an hour, come back, or in 2 hours, come back. I know I say this a lot, but it is really important to understand this. Hey, Marius, you took the trade at the same time. Marius, yes. You just need to understand that there is a delay on the stream. Okay, there is a small delay. If you switch to a 10-second chart, your charts should look a little bit different than mine. Mine should be a little bit behind. You guys, I really don't recommend you try to take trades when I'm taking trades here, because there is sometimes there's up to a 20-second delay. It's not usually that long, but it can be up to 20 seconds sometimes. So please don't. It's not advisable to try and take the same trades that I'm doing, because there is a delay on the stream. I feel bad that you did that and you lost it. But I'm pretty sure if you actually go and look where your entry was, and you go and you rewind the video a little bit, and you look at where my entry was, I'm pretty sure you'll see clearly that it was at different times, because there is no way you could have taken the trade with me because of the delay. It's a few seconds. Usually it's just a few seconds, but it's enough to mess with you. Okay, guys, I really appreciate you guys watching. It means a lot. I really hope we're gonna grow this channel over time, teach people the correct way of trading. And if you guys have any questions, if something comes up during the course of the week, write it down and ask me next time. Let's see if we can sort this out. Let's see if we can get everybody profitable. So with that, I'm going to say thank you. As always, trade smart and trade safe. And I'll see you guys on this channel next week. Have a great weekend and be responsible. Okay, guys. Thanks. Cheers.